Hello everyone, this is Jim Lucy, Editor-in-Chief for Electrical Wholesale and Electrical Market, with the May 1st, 2023 edition of the Today's Electrical Economy podcast sponsored by Champion Fiberglass. Champion began producing epoxy fiberglass conduit and fittings in 1988, and in 1989 developed the first conduit from epoxy resins that had flame resistance and low smoke characteristics. This met the most stringent codes and specifications. Today's podcast will look at some of the biggest moves in the Electrical Price Index for March as published by the Electrical Marketing Newsletter, and offer some more insight into what the top 150 distributors think about the current business climate. We'll also check out some weekly economic indicators that can give you a sense of where the U.S. economy and the electrical market may be headed in the next few months. These 5 weekly indicators are initial unemployment claims at the state level, real freight car traffic, the Baker Hughes rig count, oil prices, and copper prices. Our thanks again to Champion Fiberglass for sponsoring today's Electrical Economy podcast series for 2023. For the week ending April the 22nd, the advanced figure for seasonally adjusted initial unemployment claims was 230,000. That's a decrease of 16,000 from the previous week's revised level. The 4-week moving average for unemployment claims was 236,000, a decrease of 4,000 from the previous week's revised average. The U.S. unemployment rate for March is 3.5%. These 5 states had the biggest decreases in unemployment claims for the week ending April the 22nd. Ohio's claims were down 3,280. New Jersey was down 3,073. California's claims were down 3,003. Connecticut was down 1,999. And Rhode Island was down 1,428. On the flip side, these 5 states had the biggest increases in unemployment claims for the week ending April the 22nd. Illinois' initial unemployment claims were up 2,636. New York was up 1,548. Mississippi's claims were up 1,171. Colorado's claims were up 676. And Michigan's claims were up 573. An interesting leading economic indicator for the overall U.S. economy is freight rail traffic. It's a measure of the amount of raw materials and finished goods being shipped by rail. The best source for this data is the American Association of Railroads, or AAR, which publishes this data weekly at www.aar.org. The most recent week's data shows that total U.S. weekly rail traffic was 480,457 carloads and intermodal units, which is down 3.5% compared with the same time last year. Total combined U.S. traffic for the first 16 weeks of 2023 was 7,417,045 carloads and intermodal units. That's a decrease of 5.6% compared to last year. While the year-over-year weekly declines continue, and the freight volume is still well below the 500,000 carloads and intermodal units that we have seen in healthier times, it's noticeable that the most recent data is the first time freight volume topped 480,000 carloads and intermodal units since January. 6 of the 10 carload commodities posted an increase compared with the same week last year. They included coal, which is up 0.5% to 688,879,000, motor vehicles and parts, which is up 10.2%, metallic orders and metals up 2.6%. Commodity groups that posted decreases compared with the same week last year included grain, which is down 6.5%, forest products down 6.3%, and chemicals down 6.2%. If you track the oil market, you're probably familiar with the Baker Hughes rig count, which tracks the oil and gas rigs that are operating. The data is available by state, by basin, and nationally at www.rigcount.bakerhughes.com. This slide gives you an idea of the largest oil and gas deposits. It really gives you a good sense of just how many of the large oil plays are in Texas and Oklahoma, and how big an area the Marcellus gas region covers in Pennsylvania, Ohio, and parts of West Virginia. The total rig count increased by 5 rigs to 753 during the week ending April 21st. It's up 58 rigs year over year for an 8% year-over-year gain. None of the major basins saw any really big change in rig activity by more than 1 rig, except for the Permian Basin, which was up 2 rigs. The Permian Basin, as we've mentioned many times over this podcast, is the largest by far in the U.S. Its total weekly count right now stands at 358 rigs, which is up 24 rigs from last year's count of 334 rigs. The current price of West Texas Intermediate crude oil as of May 1st is $75.81 per barrel, and that's according to macrotrends.net. The average price of a barrel of West Texas Intermediate crude oil for 2023 is $76.80. Prices have dipped below the $80 mark in mid-April after spending several weeks above that mark. They did increase slightly over the last day. Economists like to call copper pricing Dr. Copper because it's a leading economic indicator for future activity since copper is used in so many industries. The construction industry is among the leading markets for copper because of its use in wire and cable and copper plumbing pipe. COMEX copper prices as of May the 1st is $3.97 per pound. They have dipped below $4 per pound, but the average price for COMEX for the year is still at $4.07 per pound for 2023 year to date. Now let's take a look at some of the biggest changes in electrical marketing's electrical price index. We appear to be past a lot of the volatility that we'd seen over the past year, but there still are some changes of note. Most of the movement of note was on the monthly side, which as a whole was down 0.8%. There are quite a few product categories that show some declines. Those two categories are conduit fittings, which are down 4.3% for the month, non-metallic conduit down 3.3%, appliances down 1.5%, building wire and cable down 0.8%, telephone wire down 0.5%, power line cable down 0.3%, pole line hardware down 0.2%. Boxes were down 1.1%. The wire devices and connectors was the only category that was above 1%, or 1% or above, I should say. When you take a look at the slide on the right, which is the year-over-year data, the changes were not quite as dramatic, but some products are still showing some huge year-over-year gains. Products showing some of the biggest gains are wiring devices and connectors, up 25.4% year-over-year. Metal conduit, up 20.6% still. Switchgear is up 3.5%. Transformers up 12.1%. Lamps up 11.7%. Fuses up 11.5%, and another category that was up double digits were boxes, which is up 10.1%. This is just a few of the highlights of the electrical marketing's price index. If you want to get the monthly data plus historical data going all the way back to the 1990s, you can subscribe for $99 per year for a monthly update on the electrical price index, and you can find the information on that at electricalmarketing.com. This chart will give you an idea of just how big we had seen prices go up over the past year or two. And if you look at the chart, the orange line indicates the year-over-year change, which at one point was up 20% year-over-year. Certainly the month-to-month changes were not quite as big, but if you take a look at that blue line, you can see that they increased around the same time, peaking right around the December 21st to January 22nd time frame. Historically, year-over-year change are 2.6% year-over-year change on a month-to-month basis at 0.22%. So you can see the changes that we saw, with as I mentioned, the year-over-year being the most dramatic. Let's take a look at a few more pieces of data from our surveys coming in from our top 150 distributors. And just a gentle reminder, if you are an electrical distributor and you haven't gotten in your top 150 survey, please do so. We're just compiling all our data right now. We want to get a good representation for this year. This slide shows responses from our top 150 distributors when we asked them which end-user market segments are showing strong growth in 2023 and which are lagging behind. Commercial construction and utility led all categories, with more than 50% of respondents saying they were showing the strongest growth so far this year. There was a pretty much mix of these sections that were lagging the market. As you can imagine, residential construction was up fairly high. Commercial construction about also around the 30% mark. Industrial construction for our respondents also was a little higher than I would have expected when you think about all the plants are going in the EV and semiconductor areas. Nothing too crazy, but it was up about 25% of respondents said that was a lag in the market so far. But all in all, I guess this gives you a pretty good representation of the market segments that the distributors do anticipate to grow. As we end up our podcast for today, I just wanted to give you one more observation on the responses from distributors. When we asked our top 50 distributors which was the key factor in their increase for sales last year, we saw that the basic growth drivers outside of inflation were very much in play. Market share growth, customer demand, and better economic times. And certainly in these days, inflation was a big thing as well. But it was interesting that market share, customer demand, and better economic conditions, which are drivers for a good market over the years. Nothing too surprising about that. So I guess it shows that even in volatile economic times, some things do stay very much the same. That wraps up our podcast for today. And again, a special thanks to the folks from Champion Fiberglass for sponsoring today's Electrical Economy Podcast Series for 2023. please do contact me if there's any other types of economic data that you would like us to cover in these podcasts. Our next presentation will be on May 15th, 2023. And if you're an electrical distributor and you'd like us to be considered a company for listing in the top 150, please do get that survey in. If you do need a copy of the survey, you can contact me directly at jlucy@endeavorbtb.com. Also, as we mentioned with the electrical price index information that we discussed today, those are just the highlights. There's a wealth of data that's available every month from Electrical Marketing for just $99 as part of your annual subscription. So until our next presentation on May 15th, be healthy, be happy. I look forward to talking with you in 2 weeks.